everybody, this is Nick Groves, your host here at Trading Analytics, and today let's talk a little bit about this week and what's going on. We had PPI yesterday actually come in at 0.5, but then the revision of last month actually dropped it. So you saw the market sell off a little bit, and then it rallied into the close yesterday, and now we're sitting at all-time highs following CPI. CPI came in line at 0.3. That actually dropped the year over year from 3.8 down to 3.6. But retail sales weren't all that great. Those came in at 0.2, but the revision last month actually dropped it even further. So interesting data. What we're seeing is this month we lost some jobs. We printed about 172, I think it was, versus the 243, I think it was expected. Don't quote me on that. But you're seeing jobs weaken, you're seeing inflation come down a little bit. That gives people the sense of, okay, well, maybe it's time to start talking about Fed rate cuts. Rate cuts could come back. I think right now we're pricing in about 2 rate cuts come December. So you'll see that right here. And the market's liking it. However, that's not good data. It could get a little bit ugly at some point, but while we're up at these highs, there's no reason really to start shorting this market. It can continue to stretch, and I think now that we're up here, the conversation for a blow-off top is completely relevant. So what would that look like? Well, I have some extensions drawn here, but what you'd see is a strong move, call it 3% or so, 3 to 5% up near 5,500, 5,600, and then a strong rejection of that price level, only to close the day negative to flat. That's what you'd be looking for. But if you're looking to short this market, just wait for it. It tells me a couple things. It sounds juicy to be short up near 5,300, but you could get squeezed out of that pretty bad. So just err on the side of caution. But really what I'd be looking for in the S&P if we were going to start to debate getting short is if we actually close the day below 52.65 or so. That would be a false breakout of this ascending channel. False breakouts do technically lead to breakdowns, but that is a long ways away. And right now we are mushing higher. I would like to point out though that we are looking at the OPEX this Friday, 5/17. We have a call wall here at 5,300 and another one at 5,350, and then some big strikes at 5,250 and 5,200. We're sitting at 5,300. Could that act as some resistance? It definitely could. Looking at the smaller time frame, we're kind of hovering right here right now, but we need to see more develop. It certainly didn't reject it that hard, so maybe that's not going to be the case. But yeah, so when I look around and I see us at all-time highs, what really draws my attention is what's going on in the Mag7. So taking a look really quick, I'm going to try and zip through these for you guys. Facebook's still struggling around the highs of last week, sitting up here around 477. Support for me is going to be around 461. I need to see more develop here in Facebook, but it's not at all-time highs. Google is close to all-time highs. From a daily perspective, it's up near the 127% extension, the channel resistance. I'm sick of talking about it, but I want to see more develop here in Google. Microsoft, for me, is at a sell zone. It's a 786 of this recent range, 421 to 419. I think there's some decent resistance up here, but we need to see more develop, and it could continue to just squeeze. It's looking quite strong. And when you think about squeezes, you want to see, looking at the fear and greed, we're barely in greed. This just came about today. You want to see extreme greed really begin to show up before you think, okay, maybe it's time to reverse, because these Mag 7s could just stretch higher. And looking at the Mag 7 composite, it is pretty much at its all-time highs. One of the main reasons why it's up there is we have Apple and Nvidia both performing quite well today. Apple broke out of its resistance trend line, and it is back up and alive. I would be looking at 192 as resistance in Apple. Apple's been bearish, and if it stretches up here, it's still making lower highs from December. So I'm not overly excited to get long Apple. It's had its struggles this year, so we'll have to see how it reacts. But I would look for a close below 185 to begin to debate shorting this asset. Now, looking at Amazon. Amazon had a false breakout of the all-time highs from last week. And it doesn't look all that great, but I do imagine that it could actually be at support here. Just looking at some of the fibs really quick, I think that it's sitting right near its 38.2. It could continue to mush higher, so we're really at some strong inflection points. Now let's take a look in NVIDIA. NVIDIA broke out from this channel here, channel resistance at, I think it's 910, and it's stretched higher. I do also believe it's at the 161% extension right now, sitting up at it. We'll have to see how it reacts. We do have earnings next week in NVIDIA, so that could get interesting. But let's say that this continues higher. Where are we looking for? I'd be looking for around 1,000. I'd be looking around 1,000 and really 1035. I think if we get up here, we probably push right through it. What a stock this has been this year. It has been really crushing it, and semiconductors have been leading the way. But let's look at the semiconductor index. That is sitting up at the 786 right now. I think that is important to note. It's gone on quite a tear. You can notice on the 1 hour RSI, it's quite overbought. So we'll have to see if it decides to ease off. When you look at, AMD's doing all right. SMCI, what a rip that had today, up 12%, but it's coming up to its 786 of the recent range. Well, actually, I'm sorry. 786 comes in at 950, so I'd be looking at that in SMCI. Aside from that, we need to be watching yields. So yields have broken down from this ascending channel. I have this drawn, and I'll explain that in a second. But yields coming off means that equities are likely to push higher. I'd be looking for support at 4.25 in the U.S. 10-year, and see where the market's at once we're down there. If we get down there, if we don't, let's say we just reverse back up from this level. If we get back above here, that would be a false breakout of the channel, which would technically mean that we should come up above the 2024 highs in the 10-year. You're going to need some pretty hawkish comments from Fed Powell to get there, but anything's possible right now. A couple weeks ago, I don't think everyone would have been saying all-time highs, and here we are. So, interesting market. And one thing that's pretty correlated with the 10-year is the dollar index. So I just want to point out that the dollar index is on support. This is channel support. It's also the 38.2 of the 2024 range. So if the dollar wants to turn around and blow up to all-time high, or blow up to 2024 highs, this is probably around the level in which it would do so. So and by the way, dollar turning positive is negative equities. 10-year turnaround, negative equities. So we're going to have to see how we react around here. And I'm going to be updating you guys on Twitter at Trading Analytics. Check us out. I'm going to continue to try and be there for us throughout this crazy market environment that we are experiencing right now as we just continue to forge new highs. With, by the way, pretty low volume, in my opinion. Taking a look at this, this means that no one wants to step in the way right now. So the rate in which it can accelerate is higher due to that. So just be careful, and I'll be around. And thanks so much for watching.